Should we buy or sell the Pakistan stock market ETF? So first off, read this disclaimer carefully. Then do your good deed of the day by commenting and subscribing. So here we can find Pakistan under the Middle East category. Basically at the 52-week lows, 48-ish% away from the highs, definitively in a bear market. So here is the long-term chart for the Pakistan ETF. PAK is the ticker. It is at the ultimate lows. So it is definitively a bearish setup. But that doesn't mean that it is favorable for new bearish positions. The great time to turn into a bear on Pakistan was up here. Also, this was a good time to become a bear, and also here. But it wasn't that good to start to, short Pakistan around here. So the question is, okay, we have these very low levels. How low are they? So super bearish on the weeklies. On the dailies, also just ultimate big bear. But when we go over here and look at, if you look at the weekly RSI, going all the way back, there have been a few instances where we got even more oversold. But there's also, as you can see, been numerous times, like back here as an example, where the current RSI level formed the low. And back here, when that low was formed, you did get an 8% rally. And when we go further back here, it got a bit more oversold, but the current RSI and also the purple 20-week PPO level, and also the green 50-week and the blue 100-week, it's at a level that has formed long-term lows in the past. Looking at the daily data points, a similar message. You could argue here that we are at RSI support here on the dailies. You see back here, this was the exact same RSI level. Pretty good time to become a bull. Back here as well, you have a cluster around the current RSI level, and in that case, you could have gotten 52% rally. So this is a very interesting level for a more contrarian bull. So in my notes, I write RSI support on the dailies. I give the bulls here a 6 on the technicals, simply because historically this has been way more dangerous to become bearish than bullish. Now let's have a bit of a look here at the seasonality of this market. So you have the average over the last 5 years in green to the left. You do see that there is usually a bit more weakness into 9th of February, but that is when a low is formed that works out until around the 10th of March. Looking here to the right on the table view, so far in February, we are down minus 5.66%. And the only February that was worse was in 2020, which was a very special year, bearish for the market, at least key parts of 2020. So the average suggests that there could, like maybe the worst of February has occurred already. You see here that January was also a very bad month. So that doesn't mean it will go up, but it means that a lot of bad news is priced in. I do give the bulls a 1 here on the seasonality. I do think there's something bullish here. It's just that, especially the table view, given the current context, current loss for February, I think there's reason to become a bit bullish, but there's not a lot of bullish data here. Let's look at the fundamentals. I am comparing the Pakistan ETF with the Frontier and Select Emerging Markets ETF. Going to performance over the last year, minus 20% loss here for Frontier Markets, but minus 40% here for Pakistan. beta 0.71 versus 1.16, so Pakistan is more volatile. Price earnings, though, is 17.82 for frontier markets, but 6.9 for Pakistan, so definitively way lower PE. Yield is 6.06% for Pakistan, 1.88% for frontier markets. That's also something that fundamental analysts want to see. So you get very good yield. Here you can see some companies. When we look here at the sector breakdown, you get process industries, which it's very rare to have that on the top. Energy materials, finance, government. And of course, here you got FM here to the left. And market cap. So when it comes to the fundamentals here, you got very low PE. You got amazing yield. So from a purely like fundamental analyst perspective, and also looking at the sectors, they were definitively sectors that could very much benefit Pakistan, given the current context. Of course, there's a lot of geopolitics at the moment, but definitively very interesting fundamentals. Here are the long-term correlations between Pakistan and the S&P 500, and that is at 4%, so very small. 37% with frontier markets and minus 91% here with the dollar index, so very strongly negative. Short term with the daily data points, minus 3% with S&P 500, minus 4% here with frontier markets, and 32% positive all of a sudden with the dollar index. We have seen that during periods there can be a very strong positive correlation with FM. So it's a very messy relationship, but we can look at FM now because it makes a lot of sense to look at it, but obviously the relationship was a mess. In this case, we have a bit of a rather messy inverse head and shoulders pattern. Shoulder, head, and a shoulder, but the right shoulder is below the left. So it's a weaker inverse head and shoulders, but it still is that pattern. Looking here at the daily data points, the green 50-day moving average has been relevant as resistance and support. We are currently testing it as support. Let's look a bit here at the seasonality. The seasonality here is actually pretty decent. Looking here to the left, to the right, we have 0.79% loss for February. Overall, February does have a bit of a tendency to be bearish. March, messy. Usually it's bullish, but when it is bearish, it can be super bearish. But there's something interesting here with FM, which could potentially be bullish here for Pakistan. So let's now compare Pakistan, PAK against FM, like that. Weekly data points. So looking here at RSI, we are at one of the lowest levels. There's been some periods here in 2021 and in 2019 when Pakistan even more substantially underperformed frontier markets. So we are currently at an RSI support level, but we could go lower. Looking at the daily data points, we are at RSI support. The previous time we had this reading was back here, and then Pakistan entered a protracted period of outperforming frontier markets. Looking at the seasonality, usually a bit more weakness from Pakistan into 8th-ish of February, then some outperformance. For February, we have 3.9% underperformance, but that is the worst so far. But March is not exactly bullish, so there's that. But when you look here at some of these times where March has been very bad, February and April were good, given that January was really bad for Pakistan in this repair, it could be that a lot of bad news is priced in. I will give the bulls a 6 here on relative performance. So we end up with 5.3 in favor of the bulls, We are at RSI support here on the dailies, so all in all, this looks pretty interesting for Pakistan. Okay, so we do have some time left. I think that what we can do is to look at some of the trade ideas that I published back in February of 2022. One of them is Hershey's, HSI. In that case, I was bearish. So let's do a bit of a review of Hershey now. So strength now from Hershey, a big bullish candlestick for the week that just passed. Daily is very strong rally. Okay, let's get the data. So now it is loading, and on the weeklies we are not like overbought or anything like that. On the dailies, yeah, we aren't at like emergency like territory for the bulls on RSI, but on the purple 20-day PPO, this is a bit precarious. It's very high. I mean, the previous times we have been at these levels, it usually actually was a bit shortable. So this is not an ideal time to turn into a bull on the seasonality. So we are in a strong period for Hershey that usually extends into later February. Looking in the table view, 5% so far for February. Looking at past Februaries, this is very high though on the spectrum. March is however a very bullish month for Hershey, overwhelmingly bullish. So the seasonality is supportive. Looking at price book, price to sales, price earnings, it's decent. It's not, we don't have like a deep value situation for Hershey anymore. 1.7% yield, well, 75. The average analyst price target is 5.6% above us. Highest is 18-ish%, lowest is 6%. The analysts are however very neutral. So Hershey is sort of like, yes, overall it's sort of bullish, but maybe this isn't the best entry opportunity for a bull. Next on the list is actually PayPal. PayPal Holdings. A year ago, I looked at PayPal. Yeah. So PayPal is emerging from a double bottomish pattern here. Now it is testing. Yeah. Well, there isn't. Well, there is some interaction here between the green 50-week moving average and PayPal. Let's look at the dailies. Yeah, we have now broken out above the 200 daily moving average. But this is also one of those cases where we have seen a strong rally. So, the big question is, what should you do next? We are still low on RSI and PPO on the weeklies. On the dailies, and we did actually test the upper level of RSI. So in that case, there could be some pullback. Looking here at seasonality, overall it is pretty decent here to the left. We had 14% gain for January, 5% so far for February. March is, looking at the sum here, overall it usually is a bit of a bearish month. Yeah, looking at the fundamentals, we are still rather low across a bunch of metrics. PayPal, it's been very depressed. Looking at the forecasts, and they have earnings now in 4 days, on the 9th of February. Average price target is 18.5% above us. Analysts are overall quite bullish, strong buy for PayPal. So yeah, I think PayPal, it's maybe the best, maybe like the great entry opportunity has passed, temporarily at least. The same thing for Hershey. Hershey could of course have a full board breakout. It's just that I don't like to actually buy the breakout as it is happening. I rather want to be part of the rally before the breakout, because then I also have a buffer. Then sort of like the breakout would be then the icing on the cake. But to bet on the breakout itself, it's just, The risk reward, if you do that many times, is not that good. Buying breakouts is something that is very easy to automate with algorithms, and it's not a successful algo to put into a system, because in the stock market you have many stocks, and of those stocks very few go on to consistently make new 52-week highs. That's rare. So to bet on that is just doesn't make sense. But many stocks attempt to have breakouts. That's a very high frequency event. So if you bet on that trip up to that resistance level, that is a much better bet. So that's why I like to get in before the breakout is about to occur. Pakistan is very very depressed stock market. But looking at the history of this ETF, this hasn't been a spectacular time to turn or continue to be bearish. So I do think that there's a bullish speculative opportunity, but it is definitely very speculative. It's definitively more of a higher risk market.